Stanley Black & Decker, she said, leading the gains. Let's bring in Melius Research Chairman and CEO Scott Davis. Scott, great to have you on the show. Thanks for being here today. Industrials, ahead of earnings season, what are you watching for? Where do you expect to see some strength?
Well, there's no shortage of stimulus out there, right? I mean, you've got all these mega projects that we've announced that we've counted up to about $400 billion that are driven by localization, and the CHIPS Act and the IRA and the infrastructure spend that's going on out there is just massive. So this has been, I think, the beginning of perhaps one of the best industrial up cycles we've seen in a generation. So we're going to be looking for signs of demand still strong, and what's perhaps orders going into the backlog from all these big projects, and we're going to be looking for margins that come out of this. I mean, we should be in a great environment to make profits because price is up and costs are actually up less than price. So we should be able to make some money here. Yeah,
it's that sweet spot that we've been waiting for companies to sort of realize. The question, though, is how sticky can those higher prices remain, especially if we were to go into, say, a recession later this year?
Well, recession has a lot of different forms. I mean, I think a soft landing is something that we don't lose a lot of sleep over. When you think about a hard landing like we had in late 2008, certainly then kind of all bets are off and projects get delayed and pricing goes down. But right now there's such a huge imbalance between supply and demand that folks have not been able to get the product that they've ordered perhaps even a year ago, right? And so there's not really a lot of excess out there as far as inventories or product in the channel at all. So I have a tough time believing that price is going to fall anytime soon because there's just not enough product out there. There hasn't been much shipped out yet.
But Scott, if there's trouble in commercial real estate, particularly office, and there are demand concerns elsewhere, how does that not eventually trickle through to industrials?
It will, and I don't think there's such a thing as an upcycle. First of all upcycles are essentially in rate tightening environments. So there's always some puts and takes into an upcycle. It's never perfect. Having said that, I think the sheer size of the projects that we're seeing are so massive. Honestly, I thought we'd peak out when we hit $250 billion. I thought we couldn't get any larger. We're up to $400 billion, and we only count projects over $1 billion in size. So a lot of folks are saying you could really double that $400 billion, perhaps even $700 or $800 billion in total projects. When you think about a non-residential recession, typically that would impact things to the tune of maybe $50 to $75 billion of projects that get canceled. So you can kind of think of the math here of $400 to $800 billion of new projects, perhaps $75 billion or so of stuff that could get canceled out. So it's just the math works very favorably.
Yeah, we're getting Boeing orders and deliveries tomorrow. Is aerospace still the place to be, especially when you think about a GE that's had such a strong start to the year? Or are there other industrials and specific names you like better?
It's a bit of a rising tide lifts all boats. I mean, the reality is that aerospace was the hardest hit during COVID and the supply chain issues, so it was a double whammy, and so should therefore be the one that comes up against the easiest comps and has the greatest upcycle here. And so we do expect the best earnings numbers out of aerospace plays this quarter, particularly commercial aerospace, not necessarily defense. But there are other names, though. I mean, if you take a look at a Parker Hannifin, at an Eaton, at a Rockwell Automation, I mean, anything that really touches the investment spend that's out there, these big numbers that we've been talking about, you should see pretty darn good numbers.
All right. Scott Davis, thank you.